The banks are in trouble. Seriously, this is like you're hearing this a month or two before it hits the headlines, but I've actually got a news story. It's out of CNBC. Look, it's real. It really exists. It's backwards. Try and read that really quick. All right, we're going to talk about this. Jeffries. Weird. The Ninja came out with a story about Jeffries and UBS, and they're in trouble. It's now on CNBC like a week later. We're going to talk about that. I want to throw a shout out to another YouTuber. His channel is called Ox Talks. I don't know if it's because he has a pet ox or perhaps multiple, some oxen. There may or may not be an emu, a baby emu inside that cage, but we're not going to talk about that because PETA would just get really upset because all I really do is I eat red meat. Okay, so Jeffries, regional banks, Jeffries shares tank as concerns about sour loans grow on Wall Street. Well, actually, Jeffries is in a lot more trouble than just souring loans. Billions of dollars have just been wiped off of the face of the earth due to a massive bankruptcy in the auto sector about 60 days ago, and it's just now hitting Wall Street. Okay, now it's going to get a lot better. Just so you know, the banks are going to completely tank in 2026. That's why I'm calling for gold to go down. Most people don't understand that. Gold actually goes down when things aren't going well. And then when the Fed starts pushing in lots of stimulus, they still go down. Then they find a bottom and take off. But anyway, sorry. Hey, there's 420 people watching right now. All right. Regional bank stocks have tumbled as fears mount around the health of their lending businesses. Weird. Banks are all but one stock in a popular regional banking ETF is tracking to end Thursday down. The whole sector's down. Hey, real quick, if you want to make stupid amounts of money in real estate without having to actually buy real estate, and 99% of real estate investors have never done this or know how to do it, links down below. Price going up soon to the tax lien course. And it's the best course in the country. And if you don't like it, if you don't like Ninja and are not gonna make any money, if you don't watch more than 50% of the videos and you don't think it's gonna change your life within 14 days, I'll give you your money back. All right, here we go. Shares of regional banks and investment banks or Bank Jeffries tumbled on Thursday as fears mounted around some bad loans lurking on Wall Street. Lurking. They are right in their faces. I'm already telling you. Zions Bancorp dropped more than 10% midday, as did Western Alliance Bancorp. The SPDR S&P Regional Banking ETF lost around 4%, but all but one member of the popular fund to track to end Thursday's session in the red. The bankruptcies of two auto industry related companies. And just so you know, nobody's talking about what happened last Friday. Okay, that's way worse than this thing. But this is already, causing bank stocks to drop. The bankruptcy of two auto industry related companies this year have raised concerns about loose lending practices, especially in the opaque private credit market. That has left both the banking industry and investors concerned about whether instances of loans gone wrong indicate a burgeoning crisis. What the freak? Who's writing this crap? Obviously not for a dude that didn't pass high school. That's me. The latest sign of trouble came when Zion said Wednesday evening it is faced with a sizable change because of bad loans to couple with borrowers. I'm sorry, just you guys don't know how much money we're about to make from this crisis. It's going to be stupid awesome. Despite expanding or expecting that this was an isolated event or instance, the bank said that it will encourage its counsel to have an independent review. So I want you to understand, by January 1st, when all of the data has to come out from the quarterly earnings and the end of the year earnings, they're going to they're already prepping you on CNBC. Those bank stocks? Yeah, not looking too good. They're not bad, but they're not looking great. They're like good, but not great. And then like a couple weeks from now, like, you remember when we said they're looking good? Well, they're not looking good. They're looking cool. Did you just say cool? No, Ooh, yeah, and then what's going to happen is they're just going to keep prepping people. Please don't sell our stock. Next year's going to be awesome after we crash. And then the stock market's going to go. Fed governors are already saying we better start lowering rates. And there's an argument right now between a couple Fed governors. And just so you know, it's not going to happen this month. It's not going to happen next month. It's going to happen in January. There's an argument between multiple Fed governors over whether to lower this month 25 basis points or 50 basis points. Now, that never happens right away. They got to play a tug of war with the president. But it means that things are really bad. For a Fed governor to say, drop 50 basis points, it means things are bad. But we don't want to tell you because we still want to issue you crappy dollars. But ironically, dollars are going to be what's most important in the next 60, 90, and 180 days. Don't tell that to gold bugs, though. They'll freak out on you. All right, here we go. Now, it says here, this is Jeffries. While we are questioning, oh, wait, no, hold on. This is Western Alliance. Western Alliance Bank then alleged Thursday a borrower had committed fraud. Well, we already know that. It's the auto industry. That rattled investors, despite the company saying it could reaffirm its guidance and 2025 outlook. So see, they're right there. They're saying, we want to reaffirm our outlook, but somebody's committing fraud. No, Western Alliance. You probably had a broker on the take and gave. We're going to find out soon. In 2026. Yay! But this is their answer. While we are questioning why all of these credit one-offs, how do you like that? They're calling them one-offs. That's so cute. It's only going to happen once. It was just a one-off thing. This is not going to happen again. The house behind me is not on fire. That is not a baby emu. And please, PETA, don't get upset. I might eat the dang thing. I mean, I'm just hungry. It says here, one of these credit one-offs are seemingly occurring in a short period of time. The reality is that even though these exposures may be well contained, what line, sexa, and have a limited financial impact, this is an industry where investors, especially those that are new to this sector, tend to sell first and ask questions later. Or maybe the people selling their stocks are watching the Economic Ninja channel and he's exposing, hey, banks are about to crash in 2026. Gold's going to go down. Watch out. Everything's going down. Starts January of 2026. Mark my words. Do me a favor. Clip this. I'll put it on X. It's like the ninja said. And then everyone can see. It'll be amazing. We've done this a handful of times on this channel. All right, here we go. So they tend to sell first and ask questions later, especially when it comes to elevated credit concerns. That's a quote. Dude, can you imagine right now some I don't want to say a bad word, but some turd, I'll just say turd head at a bank is going, look at everyone's selling our bank stock. Look, there's multiple one-off events where, we're finding out that we're losing money because all these loans we made were illegal or unethical or whatever. But you shareholders are just selling without holding. What is wrong with you? And I'd love it if a reporter went, so have you sold your stock? Oh yeah, I sold a while ago. This shit, oh crap. This crap's getting crazy. Hey, you know what? Do you know that there are a lot of people that watch this channel that understand, like, this is just logical and I don't need to wear a fancy suit or show up in a fancy car, to prove this is what's really happening. But man, there are a lot of people out there with fancy news desks and their own little news channel on YouTube that can't even figure this out. But they'll report on it when it actually happens. So now this part of the story is really important. It's called looking for cockroaches. You can't make this crap up. This is how they want to make the people that are selling bank stocks sound like stupid, but they aren't. They're actually smart. All right. And again, I've not read this until I read with you. It's story with the ninja time. The worries about the health of the banking industry originated with the bankruptcies of companies related to the auto sector, which is First Brands and Tri-Car Holdings. Hey, thanks, Jeff, for the super chat. That's enough to buy a coffee, and I'm very grateful. I'm not actually being sarcastic. I'm going to enjoy a coffee later today because I don't have enough caffeine on board. So the First Brands and Tricolor Holdings have gone under. Auto parts maker First Brands went bankrupt last month and announced this week that the founder, Patrick James, stepped down, no duh, as chief executive. The Ohio-based company is facing a Justice Department criminal investigation. You know who should actually also be investigated? The bank that gave them the loan, because I'll bet you they didn't do their due diligence. What? That's okay. No one's going to jail. It's okay. All those bankers that are about to see their shareholders lose all their money as their stocks implode in 2026, they'll just get another job. Shares of Jefferies, which has exposure to First Brands, fell more than 9% today, right now. The investment bank stock has lost around 23% in October alone. That's not a crash. That's just a warm-up, making it poised to record its worst month since the COVID pandemic took hold in March 2020. Jeffrey said that hedge funds it runs are owed $715 million. It's almost a billion. From companies tied to First Brands, while UBS said that it's about 500 million exposure. UBS is like, we are so much better than Jeffries. We're only losing $500 million. Now, this is Jamie Dimon speaking, so let's all listen up here. He says, when you see one cockroach, there are probably more. Well, good job, Jamie Dimon. You freaking cracked that code. Banking sector analysis. Woo! He said this on the company's earnings conference call earlier this week in relation to First Brands and Tricolor Holdings fallout. He already knows. It's like the economic ninja. Crap's going down. I'm trying to keep this clean. JP Morgan did not have exposure to First Brands, but it did take a $170 million charge-off last quarter from Tricolor. Remember, I said charge-offs are going to become a thing in this current quarter's filings. You're going to find a lot. The word on Wall Street in January of 2026 will be charge-offs, and possibly we'll throw in a little color. How do you like that? We're going to start using the word write-downs too. So this is pretty much it. We're going down like the Titanic, and this one's a lot bigger. This time it is different. It's going to be worse. And I hope you guys hold on to your shorts. Now, we're going to see a little pump over the next 8 weeks in crypto. Actually, the crypto pump's going to probably be pretty large. And in silver and gold. And then get ready, because the stock market's going to start slipping in December. And I'm going to be talking about it's time to move to cash. And hey, if you got profits right now, move to cash, because the dollar's getting stronger. People don't like hearing that. The dollar's going to get stronger into a Fed lowering cycle, and to where they can print more dollars and take that hit on the DXY. Guarantee you haven't heard that idea anywhere. All right, with that being said, hopefully if you want to learn how to make stupid money from the tax liens before it goes up, course is down below. If you don't like it after watching less than 50% of it in 14 days, say, hey, Ninja, I want my money back. All right, no problem. But I'm pretty confident you're not going to say that, honestly. All right, with that being said, the Economic Ninja is out. I think I got myself an emu I got to go wrangle up. Grab that right now.